Thanks for tuning into this broadcast of The Resilient Advisor. My name is Jay Coulter, and joining me for this episode is a power couple in the world of the PPP. Shelly Bykat has a CPA practice in Atlanta, Georgia, and her husband is a senior vice president at Cornerstone Bank. They have been living and breathing the PPP program for the past month, and they agreed to come on the podcast and share what they're seeing in the marketplace today. Guys, I appreciate you coming on.
Thank you for having us.
Happy to be here.
Yeah, so full disclosure, the Bykats are close family friends of ours. They know more about this program than anybody I've come across. And because of the dynamic of having both the banking lens and the accounting lens, I thought it made sense to bring them on the podcast. So let's start big picture, guys. The basics of the PPP today. What do we need to know?
What you need to know is if you have not applied, please get your applications in. If you are eligible to apply, please do, because this will help fund your payroll for 8 weeks. If you've laid people off, you can bring them back on. If you have reduced their hours, you might be able to increase your hours. But let's get an application in before the money runs out, assuming Congress does not extend the program.
All right, so let's talk about that. I thought I saw some tweets, which means they're probably not real, that the program has already run out of money. Is there any truth to that?
Well, best we can tell is it's very close to running out. I know I saw some info even last night saying it did run out. We've been able at our bank to get some approvals this morning. So there's still some money left. It's just a question of how much. And we actually think now as the West Coast is coming online from a time zone standard that money probably will be exhausted pretty quickly. So we would expect by end of day today and maybe even sooner than that. So and we do think and we hope that there'll be more money allocated to it. But at this point, it's just a numbers game and it's rushing quickly.
All right. So if it's going to run out today, Eric, is it just futile for somebody who hasn't applied to start the process?
Well, I think it's going to be tough. I think if you haven't already applied, I think you can go ahead and apply in hopes that there's another round coming. And then if that more money is allocated, then you'll be top of the list for round 2. So I certainly wouldn't give up. I think the most important things now is if you are working with a bank, if they have emailed you any questions, if they are waiting on any information, the time is now to get them all the information that they're requesting, get it to them, be the squeaky wheel, and hope that you get approved. And then if you're not in there yet, then be ready for round 2. So get everything lined up as quickly as you can.
Eric, I know a lot of the frustration came from folks who were told by their bank that they were not going to work with them if they didn't have a pre-existing relationship with them, which my interpretation was if you weren't already in debt, you can't apply for more debt with some of these banks. What do you recommend for folks who don't have that pre-existing business relationship other than a checking or savings account?
Sure. Well, and I think you're right. I think early on, a lot of banks, us included, just weren't sure what the activity level would be, what the process would be, and how much verification we would really need to go through in each loan. So I think early on, most banks were requiring, or early on, we required either a deposit or a loan relationship. So if you had an existing depository relationship, we considered you an existing client, and we first worked through all those requests. We have since opened it up to what we call a friends and family referral. So if you know somebody at the bank or a client, then we'll certainly look at it and try and help you. I think what has really come into what people have seen through this is the importance of having relationships with bankers, with CPAs, with financial advisors, with attorneys, not just going to them when you need something, but reach out to them and build that relationship, go into the bank, go into the attorney office, the CPA office, call them, know who you're dealing with and let them know who you are. And the more they know about you, then the quicker they are able to help you when you really do need something. And what we've seen is those clients that have relationships with other third parties, whether it be attorneys, CPAs, financial advisors, those folks are also helping the clients get their paperwork in order. And it's coming to us as a bank, coming much more complete, and we're able to kind of churn through it much quicker and get the decisions done with less back and forth between the banker and the client, which just makes the process a lot longer. So I think I would just say the most important thing is whoever you bank with, whoever your third party folks are that you work with, on CPAs, attorneys, financial advisors, et cetera, know them, build some kind of relationship with them so that when you do need them, they know who you are and they'll put you at the top of the list.
Yeah, Erik, the importance of those professional relationships has been a reoccurring theme that we've seen here over the past month as this has unfolded.
Yeah.
Shelly, the audience for this broadcast are typically financial advisors, some independent advisors, and then all advisors have those entrepreneurial clients with small businesses. Tell me, who should these advisors be focusing on right now, serving and getting them started in the process? Who can apply at this stage?
Small businesses can apply. They have changed the definition of small businesses to 500 employees or lower, but there's still some wiggle room there. I would encourage the investment advisors to pick up the phone and call their small business clients, have a conversation with them, talk to them about if they've applied, just chit chat with them. Because I think if you get on the phone and you chat with people, you might have information that they don't have or they don't know, or vice versa. They might be able to tell you something they've learned in their process that will help the investment advisor. So, and if you have if an investment advisor has a relationship with a CPA or a banker, I think just keeping those lines of communication open and help facilitating the process, the investment advisor can add value. It's hard to know where, but if you just get on the phone and call your small business clients that have employees, LLCs, the members can apply. That money can be included with the payroll, which is shocking because you can do self-employed people can apply, but it's only Schedule C. So if you have an LLC member who is active and pays self-employment taxes on that income, then they can add that to their application amount. So that would be great information for an investment advisor to chat with a business owner about. Did you know this? Have you seen this? This guidance just really came out the last couple of days. Banks were confused by it. They didn't know whether they could include it. So just provide information and know that some of the information is changing and we're not always clear on the guidance we're giving.
Yeah, the information changing is what's created a lot of confusion. Sometimes I find advisors are able to add more value if they're able to create some, I don't know if excitement's the right word, but the call to action.
Yeah.
And that could help if you could maybe walk through what the basic computation at a very high level,
Yes,
what the loan amount could be, because they could call their small business owner clients and say, hey, did you know X amount of dollars is on the table here for you?
Yes. So it is. So it's up to $100,000 per employee, and it is literally gross wages. So if you're paying an employee $10,000 a month, it's $10,000. It's not $10,000 unless they're 401k or their dependent care benefits or their flexible spending accounts. It's $10,000. So you take the total payroll of the company for 2019, big picture, 2019, you divide it by 12. Well, you can add in the health insurance, the group health insurance that the company is paying on behalf of the client, the retirement. So for instance, if you have a safe harbor plan, they can add that amount in. And then the SUTA taxes, the state unemployment taxes, you can add those in. You take that total, you divide it by 12, and you multiply it times 2.5. That's your loan amount.
So there was a lot of disinformation or just inaccurate information about the loan calculations in the beginning, is my understanding. What implications are there for people that applied given the old data, the old rules?
Well, they probably didn't get the loan amount that they could have gotten, but we don't even know what the forgiveness rules are yet. We're waiting for that to come out. So it's interesting because they took out a loan, but they're not even sure how much of that loan is going to be forgiven. And that's where I think investment advisors could be super helpful, because right now the CPAs and the bankers are kind of in the nut and bolts of the calculating the loan and getting the loan. If the investment advisors can go in and start reading some of the details related to the forgiveness, they can add value to the client. Recommend that the client set up a separate PPP checking account. Put all of the funds from the loan going through that account so that when the banker comes back and says, all right, it's time to apply for forgiveness, they can just say, here you go, here's your PPP loan activity, and have the advisor say, this is what I'm reading. The forgiveness is based on this number and this number and this number. That's excellent information to provide to your clients. It's a way to stay in front of them. It's a way to communicate. And then they'll be bragging to their friends about, oh, my investment advisor called me today and gave me some information about this PPP loan. So I think it's an excellent opportunity for investment advisors to kind of open the door to a phone call that's not negative about the stock market, which we all know could be a negative call.
That's true. And the only thing I would add to that, Jay, is that on the loan calculation side, there was so many changes, and almost every day there was new guidance coming from the SBA or the Treasury on how to calculate it and what's included. And we haven't received near as much guidance yet on the forgiveness side. So, to kind of echo what Shelly said, I think as an advisor, we're all starting almost at the same point now on the forgiveness side. And our general understanding is you calculated the loan amount based on certain things. That's where the funds have to go when they're distributed in order to get forgiveness. But what documentation will we need? Will it change? I mean, all terms changed multiple times through the last 2.5, 3 weeks. So I think there are going to be a lot of changes on the forgiveness side. I don't think we've received all that information yet. So I think anyone who wants to start studying on that is going to become a huge asset.
That's right.
Because now clients want to know, okay, I qualified for the loan. I'm getting the money in my account. We're doing exactly what Shelly said, which is we are we're highly encouraging clients to open up a separate account at our bank with triple P, put in the name so they know that's where the money is. And that's where all their payroll should go through. That's what we think. And that's, I think, what clients are being told from third parties as well. But then when it comes to what documentation will be needed for forgiveness, we don't even know yet. And it's not fully out there. We have a good guess, but clients also, as the business owners, really need to take the time to study it. And I'm already getting calls from clients to walk through what do we think will be the forgiveness? What do we think we'll need? Because that's a big part. I mean, every client is taking this money. And as a banker, we're approving loans that nobody plans to pay back, which is completely contrary to everything we've ever done our whole lives. So we want to help them play by the rules and understand what it is. And we just don't know them all yet. Mm-hmm. So I think there's an anxiety and a real call to action on getting the loan, but then there's going to be a need for some patience on the forgiveness. And the overall rule, I would say, is follow what you put in that application as to how you're going to use the funds. That's what was approved. And you're certifying as an applicant that you're going to do that and you're not committing fraud. And take it seriously because it's very important.
One other thing I would suggest to investment advisors that they could do if they got on the phone with their client is chat with them about the importance of looking at the number of employees you had on payroll and making sure that you get those employees back on the payroll, at least for this time period that this PPP loan is intended to cover, because that will go against you in the forgiveness portion. So that's information that they can provide. It's just pick up the phone and throw nuggets of information. You don't have to have all the knowledge. You don't have to have every detail, but just little bits of information you can provide to the client will be really helpful to the client and they'll appreciate the advice.
So, Erik, could you speak to the client experience for these small business owners and contrast a small bank versus a large bank? And there's a reason I'm asking this question. Obviously, you work for a small bank, and I think they've had better experiences. But could you kind of contrast those two?
Yeah, and I think that's a great point. I'm a small bank guy. So what we've seen on the small bank side is our clients are who we went to first. And we reached out to them proactively, letting them know, here's this program's coming out. We may not know everything about it yet, but here's what we know. Here are the original documents. That Thursday night when the president and Treasury Secretary all, said, hey, this is going live tonight or 12:01 Friday morning, the act hadn't even been officially disseminated to us to know how to put the loan together. So some banks just weren't accepting applications. We were accepting them and letting people know we're going to move as fast as we can. Once we opened it up beyond our current clients, we started finding out from clients at big banks that, they're in the process. They don't know where they are in the process. They don't know who to call. They don't know how to get updates. And the big banks are doing the best they can. They have a lot more clients and a lot more people they're trying to take care of across different states and, all throughout the U.S. We are able to focus a lot more on the clients we have. As of today, we had approved or decisioned every application we had received as of the end of Tuesday. So as of Thursday morning, everything as of the end of Tuesday has been decisioned. So I don't know, obviously, where all the other banks can say as to where they are on the how close they are to that, but we feel really good about it, and that's what's allowed us to open up to the bigger, to non-clients.
Yeah. Once again, relationships matter, right?
Mm-hmm.
Yeah, being able to pick up the phone. I mean, the group, that we have at our bank. I mean, we give our cell phone numbers to our clients. They have our emails. We're taking phone calls on weekends, all day, every day. So we're trying to be there because it's just a lot of anxiety, and we're well aware of that, and we're trying to soothe the client however we can.
Excellent. Well, let's wrap up with this. And Shelly, I'll start with you. What are the lessons that you've learned to this stage in the process and the application for it moving forward?
I think it's really important for clients small business owners to have relationships with CPAs, bankers, investment advisors, and attorneys. And I really think that it's good to find someone that you're confident with, who's not afraid to get their hands dirty, who's not afraid to say, that's a really good question. I don't know the answer, but I'm going to find out what it is. Who will pick up the phone and call another professional and ask questions and not be afraid of looking stupid, because we're all in this together. The world is complicated. And if you can find someone who can help you get a loan or get whatever you need, that just makes you feel better. So I think encourage your clients to find a CPA, to find an investment advisor, advisor banker who know one another, that you need to introduce them. If they do not know each other, make that introduction so that they can work together. They can communicate back and forth on your behalf.
Excellent. Erik, do you have any thoughts on lessons learned?
Yeah, I would agree exactly with that. I think the relationships are key. And then I think the other part is, as the business owner, you have to have a call to action, and you need to move fast, whether it's for this round or a future hopeful future round. Have that call to action, but then you also have to match that with some patience. And that's really tough too, right? Because we don't know. I mean, the government moved really, really fast on a $350 billion program. SBA, I believe, funded $20 billion all of last year, and it's $350 billion that we're going to run out of in a 2 or 3 week period. So you got to move fast, but then as long as you have the trust with who you're working with and you're following up with them, you're going to have to show a little bit of patience too, because all the answers are not there. And I think if anybody's giving you answers to every question you're asking, you're probably not getting the right answers. So I think having somebody say, I'll get back to you, I'll put it on the list, let me see what I can find out, I think is really, really important.
I would encourage the investment advisors to go on Twitter and start following, for instance, Tony Nitty. He writes for Forbes, and he publishes a lot of articles on Tax Geek Tuesday. And I know it's taxes and people think it's complicated to read, but he actually does a really good job of explaining it in layman's terms. So if you go on Twitter and start following the community, the tax community, there are a lot of questions out there that people are asking, and there's a lot of information out there.
Excellent. Erik, Shelly, I really do appreciate you coming on. This was a very valuable lesson with great content for financial advisors and their clients. Thanks for taking the time today.
Absolutely. Thanks for having us.